Hello, everyone. Thank you for joining us for our July edition of the Synergy Market Talk. My name is Ibrahim. I'm joined by Terrence and Heaven with the Synergy Real Estate team. Today, we're going to be quickly going over the market stats for July 2025, giving you an inside scoop of what we're seeing, boots on the ground, so that you can be updated and you know what's going on with the Toronto and the Greater Toronto Area real estate market. So let's start it right off. Let's start off right by looking at the main statistic that stood out to me this past month is that you know what? We actually had a pretty good month for sellers. The total number of residential transactions was actually up in July 2025 compared to last year. So it was up by almost 11%. What are your thoughts on that?
I think it was the highest in the last. I think it was the highest July in the last 2 years.
Last 4 years.
Last
Actually.
4 years.
Last
Wow.
4 years. The most number of sales in July over the last 4 years since 2021. So it's definitely interesting. Even compared to the previous month, if we adjust it seasonally, compared to June 2025, we had 13% more transactions in July 2025. So, a lot of people are talking about how the market is slow, the market is crashing, the market is this, the market is that, but the stats seem to indicate something else. Why do you think that's the case, Terrence?
I think buyers are becoming more seasoned with all the variables that are happening in the macroeconomic environment. People understand Canada's working on a trade deal. They understand tariffs have been here for a while now, and they're starting to realize that it's pretty much status quo, right? Unless you haven't lost your job. And to be honest with you, when you look at employment, I think it was the first month where unemployment ticked down from 7% to 6.9%. So that shows you as well, employment's been steady throughout all of these noisy variables that have been going on. And that's also what we're seeing on the ground. I feel like I've been noticing the buyers starting to come out of the bushes, starting to become active again. And that's probably what we're seeing with the stats showing more transactions year over year as well as month over month.
I will say though, while we do have more transactions, the average selling price has dropped a little bit compared to last year. So we're down by about 5.7%, 5.5%. So last year in July, the average selling price across all properties was 1.1 million. This year, it's just over 1,050,000.
Wow.
So,
Okay.
a 60K price drop compared to last year.
Yeah.
That brings both opportunities and potential drawbacks depending on which side of the table you're in, right? Whether you're a buyer or a seller. Why don't we talk about that a little bit? Terrence has numerous listings right now. We just had a listing that sold and had over 40 showings in 8, 9 days. So why don't we talk a little bit about 65? Oh, I was way off. So why don't you talk about that a little bit and tell us what's going on, boots on the ground?
Yeah, I think it's the same story we were kind of going over the last couple of videos or last couple of monthly market talks. Essentially, the good houses are selling. So this property, it showed really well. It was well maintained, updated, move-in ready. I think that had a big impact on the amount of showings we were able to attract to the property. So essentially, we actually decided to go with an offer date strategy for this property because we knew in the surrounding area there were not as many properties priced similarly that showed as well. So we knew we were going to have good attraction. We had 65 showings, 7 offers, which was pretty strong for what everybody seems to think is a slow market. And we sold that evening. So, and the sellers were actually pretty happy with the result. To touch on what you were talking about, the average selling price dropping, what's interesting is that I think sellers' expectations have also become more realistic as time goes on, right? You might think that at the start of your listing that, hey, you have a certain price in mind. You might have thought, hey, you know what? I think I can expect to get this price for it. But as time moves on and as your property sits on the market, you also start to adjust your expectations as a seller. And depending on your circumstances and motivations, you probably decide, you know what? It's just time to sell. And maybe I'm not going to get the exact price I wanted, but this is going to allow me to continue on with whatever else is going on in my life. And so I think sellers are becoming more willing to sell a little less than their expectations, and buyers have become more comfortable with transacting. And so that's what I think we see in the stats and also on the ground with our last listing.
So, the number of transactions have increased, but properties are staying on the market a lot longer. So the average days on market has increased from, I believe, 34 down to up to 41. So an extra week on the market is what we're seeing.
Is that including condos?
That's all types of properties.
All types of properties, okay.
All types of properties. 36 to 41. So just nearly a week in terms of how long it's taking to sell a property compared to July of last year. Why do you think that's the case? Now, it's going to be a twofold answer. Why do you think properties are taking longer to sell? Number one. And if they are taking longer to sell, is it across all property types, or is there a certain segment of properties that are taking longer to sell?
Sure. And we're talking year over year, right? 34 to 41, was it?
Yes.
So obviously the environment in general last year was completely different than what it is this year. So buyers last year were much more friendly in terms of like transacting in the market. They were more motivated to buy. This year, although buyers are in the market, they're more pickier, they're taking longer to decide, and they also know that they have the leverage. Because last year we were not in a buyer's market, right? Technically a buyer's market is 6 months plus of inventory. I don't believe last year in July we were at 6+ months of inventory. I think we were in a balanced market last year. Now we're in a buyer's market, so that definitely has an impact on days on market, right? Because properties overall are sitting longer, and the amount of inventory over 6 months is buyer market territory. So that definitely has something to do with it. The second full part of your question, if you could remind me, Ibrahim, was the mix, right?
Is it across all property types, or are there certain types of properties that are taking longer to sell, or certain types of properties that are faster to sell?
Yeah, I think generally the condo market in terms of supply is much higher than it was last year. More condos have come on the market, and that definitely probably is skewing the days on market to be greater than what it was last year. Freehold properties, I tend to find freehold properties in good condition is moving as long as the price is realistic. Market price homes that are priced at market value that are freehold are moving. So unless you're ridiculously priced and you're selling a freehold, you're going to sit longer. And if you're a condo, you're naturally sitting longer if you are a smaller condo. So condos that are 1 bedrooms, 1 and dens are moving much slower than 2 and dens, because we had a condo listed in North York, 2 and den. All of those condos were moving because first-time home buyers will prefer more space, right? So the 2 and den condos that can offer over 900 square feet, they're moving much more faster than, for example, the 500 square foot condos. So overall, just a shift to buyer's market, and then also the increase in condo supply compared to freehold supply is probably what's driving that up higher.
We'll touch on condos in a minute. I have some specific stats for the condo market. But one thing I want to touch on is we're noticing properties that are priced up to a certain price point are moving faster. And what is that price point? We're noticing just from our listings and monitoring the market across the board, properties that are priced up to $1 million, maybe a little bit over $1 million, are moving relatively quickly, right? Yeah. Especially if you're in that sweet spot between 800,000 to maybe 900,000, you can expect your property, as long as it's presented well, to move a lot faster. Why is that the case? You might be wondering. It's because that's the type of property that most people can afford. The average Canadian can afford, right? That's that first-time buyer territory. So, if you're looking to get into the market right now, if you're in a higher price point, you can maybe expect less competition. But if you're in a lower price point and it's a really nice property, although we're in a buyer's market, that buyer's market isn't across the whole board. It really is property and price dependent.
Yeah, it's very hyper local in terms of like the area, because we have a couple listings in Peterborough, not much activity happening there. So secondary, tertiary markets tend to be slower than probably GTA. And, traditionally secondary, tertiary markets, people buying there are investors. Investors have really slowed down their appetite for rental properties currently. That could just be due to the landscape as well as the general economic environment. But Ibrahim touched on it perfectly. First-time home buyers are probably the segment of home buyers that are the most active right now, right? Like not second home buyers, third home buyers. Like we're talking about first-time home buyers. Under $1 million is where their budget is, and that's where most of the activity is. Over $1 million, typically you're somebody who's upsizing, right? Because you have equity from your previous property that allows you to kind of get into the next property that's like much higher, over $1 million. But we also know that when you're looking at 1.4, 1.5, 1.6, the number of buyers in that territory is much smaller. And the supply is also pretty abundant. So they're picky, and so those ones are taking longer to sell.
Yeah.
Absolutely. We have a listing where on the same, literally in a maybe 100-meter radius, there's maybe 7 or 8 listings in that 1.5 to 1.6 price range, right? So not only are you competing with those 7 or 8 listings, if you expand the radius a little bit, there's dozens and dozens of listings and a lot of competition for sellers. So it just comes down to pricing your property appropriately. And even if you are priced well, it may take some time for a higher price point property, just because of the way the market is and because there's a smaller demographic that you can actually target. Let's touch on the condo market very quickly. Terrence spoke about it a lot, but I'll get your thoughts, Heaven, on it as well. Here are some stats that we see. So Q2 of this year compared to Q2 of last year, the total number of apartment sales, condo apartment sales, were down by 21%.
Wow.
So pretty big drop. The average selling price was down by close to 6%. So again, not a huge significant drop. It's actually pretty consistent across the board. We're seeing a 5 to 6% drop. And the total number of days on market is 34. So last year it took about 26 days to sell a condo on average. Now it's closer to 34. So, looking at this, we're definitely in a heavy buyer's market for condo. As Terrence rightfully pointed out, the average months on inventory for you to be considered to be in a buyer's market is roughly around 6 months of inventory. For smaller units, we're getting close to 12 months of inventory. For larger units, we're closer to 8 months. So regardless of the type of unit you're interested in or the size of the unit you're interested in, you are in a buyer's market if you're looking to buy a condo. Now that's great news for buyers. You can get really good deals, and we'll touch on that in a second. But obviously for sellers, you have to adjust your expectations a bit. What are you seeing in the condo market right now when working with both buyers and sellers?
I think, definitely there's a lot more inventory compared to last year. I think a lot of that has to do with a lot of the pre-constructions closing now, right? So we already have the inventory, now we have more inventory, and when there's more inventory, it's going to stay, the days on market's going to obviously increase as well. But a lot of condos, honestly, just like how Terrence said, anything that's around the 500 square foot range or anything that's a 1 bedroom or under, they're just sitting on the market, right? So I think the buyers are preferring to get the 2+ bedrooms, mainly because if they are going to get into an asset, they want something that's a little bit future-proof, right? So maybe they want something, a lot of people are working from home now as well. They want the home office, or if they're planning on starting a family in the future, they want that additional bedroom so that they don't have to make the jump in the next 3 to 5 years. And most condominium purchases that you're looking at right now, realistically, if you are getting into the market to get a condominium, you're not looking to sell in the next 3 to 5 years. You're not going to realistically make crazy amounts of equity on in the condo market right now. It's more of like a longer term waiting game.
Yeah.
Right. So I think that's why they are choosing to opt in for the 2+ bedrooms for that specific reason.
I think that's an excellent point you bring up. Right now, if you are a condo buyer, I wouldn't go into this purchase with the expectation that you're going to make a lot of money if you sell in a year or two. You have to understand real estate has always been a longer term game, but now even more so than the past. If you're purchasing a condo, there may not be any crazy growth over the next 2-3 years because there's still a lot of inventory coming into the market. There's a lot of supply, a lot of new housing developments that were started in 2020 to 2022 are now finally coming to the market. So there's going to be a lot of supply, and
it's going to take some years for that supply to be absorbed.
And you know what? Honestly speaking, prices may dip a little bit lower. Like there's no floor right now in terms of like where the prices can go, right?
Yeah.
It could drop another 5%, it could drop another 10%. There's a lot of external factors that are affecting the real estate market that is out of anyone's control.
Exactly.
So you have to look at this from the long-term perspective.
Yes.
And look at, if I'm going to be purchasing this condo, I'm going to probably be living here for the next 5 years. And I think that's why, like you said, 2-bedroom units and larger units are seeing a little bit more growth and a little bit more activity.
Yeah.
Because people are preferring to live in these larger units because they're not going to run out of space in a year or 2 years if their family gets bigger, right?
But there is a light at the end of the tunnel, because a lot of developers, they have halted their projects or they've canceled their projects altogether. So eventually, with immigration as well, there is going to be most of these condominiums are going to be filled.
Yeah, so let's break that down a little
Yeah.
bit. We're at, under the new government, new liberal government, the revised targets for immigration around 300,000 new immigrants per year for the next, I think, 5 years. Housing starts are at an all-time low. This is the lowest they have been in the last 20 years. That number is projected to drop in 2026 and 2027. So what is that going to mean? Over the next 5 years, we're going to have 1.5 million new Canadians, but not many houses being built.
Yeah.
Right? So for that reason, I do think, like you mentioned, there is a light at the end of the tunnel, but you have to be patient.
Yes.
Right? And although prices may drop a little bit right now, I think potentially they could increase, they could stay flat, they could do a lot of things, right? But if you're a first-time home buyer, you have to just understand, there's so much opportunity right now for you to get into a really good unit. We recently got a client a 1+ den over 600 square feet for 463,000. When we did
Crazy
the
deal.
Yeah.
when we did the
Which is unheard
math,
of.
when we did the math, he's paying about $2,800 all in with maintenance fees and property taxes. He was paying $2,400 a month in rent. So
Okay.
for an extra $400 you get to own, you get to pay down your equity. And the greatest thing about this deal was that he only invested $29,000 of his own money.
Yeah.
So that means in the next 5 years, if the property even increases in value by $50,000, $60,000, he has more than doubled his initial investment, right? While not paying rent and paying someone else's mortgage, right? So there's a lot of opportunities. One common question that we get asked all the time is, why should I buy right now? What if the prices drop further? Well, the reality is, and I'm going to let Terrence touch on this because he has a really good answer, but one thing I will mention is you can't predict the market. The market can go up, the market can go down. What you can only control is your situation. And if you're in a situation where you can buy right now, maybe you can work with a really good realtor that gets you a 5 to 10% discount on the market value right now. So even if the market drops another 5%, you're fine. You already have equity built in, right? But do you have anything to add to that?
I think really what you have to understand is when you purchase a property, right? And you're going to live in that property for at least the next 5 years. You're not concerned about what it's going to be valued at today or tomorrow or next year. Really, you're concerned about 5 years from now. Now, that's one aspect of all the ways that property can appreciate. So not only, or rather growing your equity. So from day one, you're paying down your equity, you're paying down your mortgage rather. So you're building equity in that way. But second is as that property eventually appreciates, right? And what Ibrahim's saying about it, the price coming down possibly, look, as immigration continues and that supply starts to be absorbed, prices are going to eventually go up when demand exceeds supply. It's just right now, that's not the case. There's more supply than demand. But over the long term, like we're talking 5 years here, that supply will get absorbed up. And then when there's a shortage of supply, prices will start to increase. And that's when, as a homeowner, you're going to start to see your equity really increase, right? But from day one today, not only you're going to be paying your own mortgage down, so you're creating equity that way versus renting, right? And here's the other thing, like, some people are like, oh, well, it cost me $2,400 to rent. And like Ibrahim said, it's going to cost that person $2,800 to own. Well, there's also other advantages that come with that, right? So he's paying down his equity, he's paying down his mortgage with more than that $400 difference every month. And he's also has control over where he's staying. Do you know how many times I've had people say, oh, my landlord, how many tenants do we work with that say, oh, my landlord is going to sell. Oh, my landlord's son is moving in. Well, as a tenant, you don't have control over your circumstances. If it's December and it's starting to snow and your landlord says, hey, I need you out in 60 days, you're moving out in the thick of winter. And if you have kids in school and you have all these other things that are going to be happening in your life, that's such an interruption, right? So also owning your home comes with a certain convenience. And I feel like that's not talked about enough.
Yes.
I'm not saying, go buy if it's, like Ibrahim said, buy if it's the right time for you to buy. But these are the other advantages that come with home owning. And I don't know if that was what you wanted me to add, or if there's something else.
Absolutely.
Go for it.
I think you hit the nail on the head. It just comes down to taking advantage of the current situation if it makes sense for you.
If it makes
And
sense.
again, it's not the right option for everybody. I just spoke with a client yesterday. He's paying $1,600 in rent right now, and he can buy a condo, but his monthly payment would increase from $1,600 to $3,000. I told him straight up, it doesn't make sense for you. You're
Doesn't.
living so cheaply. Put that money elsewhere in a different type of investment, and you'll probably get greater returns, right? So it's not the right situation for everybody, but you know,
Case by case.
that's why it's so important to speak to a professional, speak with a good mortgage agent, speak with a good realtor, and get an understanding of what the finances would look like. And then when you have all the numbers in front of you, then you can make a decision in terms of, you know, what's right for you or what's wrong for you, right? And that's
Exactly.
very important at the end of the day.
Yeah.
Our final topic that I want to touch on, I think I really like to say that it's like almost like false hope for a lot of people. A lot of people are just waiting for these interest rate announcements month after month, or
Yeah.
you know, every couple months, hoping that it's going to spur the market. But you know, we just had our most recent Bank of Canada interest rate announcement, and they decided to hold rates. And now, you know, the target is on the next one in September. I just want to make it clear right now, I don't think the interest rates are affecting the real estate market at all.
No.
And I don't think they're going to in the near future. We had 3 to 4 rate cuts earlier in the year. They didn't spur the market at all. And you might be wondering why. Historically, as rates go down, prices go further, prices jump further, right? It's almost like an inverse relationship. But the reality is all of the rate cuts are already baked into the market. They're already accounted for. So, you know, a lot of people are still waiting for that September rate cut, thinking, especially sellers, thinking, you know, when the next rate cut happens, I'm going to list my property and I'm going to get a really good price. I don't think that's going to be the case. Any thoughts on this, gentlemen?
I think what you have to understand is that people don't buy prices, they buy monthly payments. And right now, the average fixed 3-year fixed is sitting around 4.1%. The variables trailing either slightly behind or slightly ahead, just depending on how bond yields move. But at the end of the day, I just think right now, homes are still a little bit out of reach for the average Canadian, right? There are some first-time home buyers that are making $200,000 household income and are able to make the move, but it's just simply not completely affordable for everyone just yet. And so, like Ibrahim said, for it to get to that point is not going to be in the near future. It's going to be possibly next year when they make an additional few cuts where it ends up being in the 3% range or the mid to low 3%, I think is where the magic spot is to see more buyers come into the market. But right now, where it's at is, you know, this is a normal market. Like everyone thinks this is a slow market because they're comparing it to 2020, 2021, but this is a normal market. And what I mean by that is, you know, sellers and buyers are able to negotiate. There are conditions and offers. We're working really hard to get deals done for sellers and for buyers. So it's a natural market where, you know, sellers don't have a crazy advantage. And I mean, we mentioned it, it's a buyer's market. So I think rates still have a little while to go before more buyers come into the market and it's more affordable. But that being said, like Ibrahim said, it's going to be a little while. I think maybe one cut till the end of the year, I think is what the banks are forecasting right now. There's no guarantees of that. And so one rate cut, we're talking about 0.25% here. It's not going to change a lot of things, right? So
Yeah.
But it's also going to add into the inventory. I think over the interest rates, it's mainly the inventory which is you know, affecting the prices, right? So just like how Ibrahim said, when the interest rates come down, a lot of sellers are going to think, okay, now that the interest rates are down, I want to put my house up for sale too. So when the interest rates drops, there's going to be more inventory that floods into the market, which is going to continue to keep the market where it's at right now.
I think that's an excellent point, and we'll cap it off with that. But one thing to add there is, you know, just if you're a seller, don't make the mistake of waiting for interest rates to drop to list your property. List when you need to sell, not when you think the market is going to be in a position where it's going to be more advantageous for you, because that's out of your control. So just do what's in your power. Do what's in your control and list when it's the right time for you to sell, whether that's because of a move or whether it's because you need to sell because you can't afford your payments, whatever the case is. At the end of the day, you know, at this point in time right now, waiting for the rates to drop is not going to be an automatic win for you. It's not going to mean you're going to get an extra $50,000 for your property. At the end of the day, how you present your property and market it is going to determine how well your property is going to do in this market. So I think you know, if that's you know, if that's your mentality going into this, that, you know, I'm going to wait for the rates to drop before I sell, I think you're taking the wrong approach, and you may end up costing yourself a little bit if there's additional inventory that's flooded in, like Kevin pointed out. So let's cap off today's session with two quick pieces of advice. Let's try to keep this short, gentlemen. First one for buyers, Heaven. What's the advice that you have for buyers?
For buyers, I would obviously you have a lot of inventory right now, and it could get overwhelming. Really speak with your agent and try to refine down your search to see exactly what's important for you. If you need a backyard, if it's a non-negotiable, focus on the non-negotiables and filter down your search with those non-negotiables, and then work it one by one. Right? Create a smaller list for your agent, and then your agent will be able to kind of figure out what the situation with the seller is. If you work with a seller who wants to sell versus if you're working with a seller who is just trying to get a higher number, if you work with the seller that wants to sell, that's where you get the deals, right? So I think just refining down your search and just take your time with your purchase, because you have the inventory as well. But if you want to get the deal, I think if you work with if you work with that seller that wants to sell, that's where you're gonna find your real deal.
Yeah, just to refine that a little bit, because I get the point you're trying to make.
Yeah.
But I think right now is the type of market where you get to be a little bit selfish, right? Be selfish right now. You have the opportunity. It's not going to always be here. So if you really want a backyard, get a house with a backyard. You don't need to compromise right now. Right now is the time for you to take advantage and really look for what you're looking for. Really find what you're looking for in terms of the amenities or the features that the property has.
Yeah.
And again, the market is such where if the property doesn't meet your expectation, there's probably going to be another 5 properties that come up over the next couple of weeks that might. So, be selfish and take advantage of the current market. And to add to that, I think, working with the right agent, we say this every week, but working with the right agent is very important. Right now, we're in a slower market. There are thousands of agents that are leaving the industry every single day. So make sure you work with someone that's in this, full time and doing this on a day-to-day basis, so that they're in tune with their current market and they're working towards your best interest, not theirs. With that, let's pass it along to Terrence. What do you think? What type of advice do you have for sellers right now?
Yeah, just to branch off of a little bit what you said, if you're a seller and it's the right time to sell, just go for it. And I'll tell you why. Because if you're anticipating to get more money for your sale, and I mean, this all really depends on your motivation, right? If you're just selling and you're not going to buy, that's a different story. But in most cases, people are selling and then they're going to buy something. Look, no seller is absolutely ecstatic in this market, right? They're not just going to say, oh, we got the best price we wanted. You're going to sell for what your home is worth, but you're going to make up for it on the buy. You're going to be a happier buyer than you are a seller. And, even with Tonberry, really quickly, get your agent to run the comps very conservatively on the home you're selling. Understand what equity you're going to be taking out as a down payment and what that upsize or downsize is going to look like. Chances are it actually will make a lot of sense to move in this market, because you know what? You'll sell for a little bit less, you'll buy for a little bit less, but in the end, you're going to be carrying a smaller mortgage going forward for the longer term, which means you'll be mortgage free faster. When you refinance later at a lower rate down the line, your payments will also drop. So it's actually a great time to sell if you're upsizing. And that was the case with the listing we just had. In fact, we were so confident with our numbers and our equity that our sellers were worried if they were going to find a home that they loved, that we bought ahead of time. The appraisal came in $110,000 higher than what we bought. And funny enough, because we did such a good analysis for them on the sale, we actually struck exactly where we thought we'd be on the sale. And they sold for higher than what we thought because we ran the numbers conservatively. And they were able to upsize for only $130,000 more than what they sold for, which is actually incredible. They were able to get all the equity out. They're going to put 20% down and still have leftovers for an emergency fund, which was much smaller than what they originally started with. And so the point is that as a seller, get someone to analyze your situation and see how does the whole scenario look from start to finish, and understand what is your home's value worth today conservatively, and understand you're going to be happier with the buy than you are with the sale.
That's excellent. I think it just, like, you can run basic math. You're right? Right now, if you're a seller but you're upsizing, you will be winning in the long term. If your current property, if you wait for your property to increase by 10% in value, and it's worth $800,000 right now, it might increase to $80,000, right? But that $1.2 million property that's going to increase in value by 10% when the market jumps, it's going to be $40,000 more expensive for you 2, 3, 4 years down the line. So, it just comes down to, basic math. If you do upsize right now, you may be taking a little bit of a hit on your existing property, but you're going to win in the long term with the property that you're eventually going to get into.
Yeah,
Absolutely.
and you can get the evaluation done for free. If you even contact us, we'll be happy to sit down with you, let you know how much equity you have in your property, and if it makes sense, then you pull the trigger. If it doesn't, then it doesn't, right?
Exactly. Well, gentlemen, that was really informative. I hope everybody found value in there. If you guys have any questions, feel free to reach out to us by text, email, or you can phone any one of us. We hope you enjoyed this session, and we'll see you again next month.
Take care, guys.
All right.